And we are good to go.
Maybe you can click the buttons, possibly.
You were completely off screen, just gonna let you know, because we decided you were gonna sit.
Oh, okay, yes, we did. I forgot.
All right.
Good, okay.
Thank you.
I hope that's... Thank you for reminding me, Kirby. Great job. Chamber of Commerce always has your back. You should join. All right, so my name is Kayla. I work at Paychex, and we help businesses with their payroll, HR, health and benefits, retirement, kind of, everything. And I like to be a resource to my clients as well, which is why I wanted to lead this presentation. I've had a lot of clients, especially recently because of tax filings and things like that, come to me wondering what are the differences specifically between being a sole proprietor and being an S corporation. So that's kind of the focus of this presentation. But then I'm here with my partners from my Corp, Alicia and Olivia, right, okay. And we're going to delve deeper into the other types of incorporations as well, because I know there are questions about LLCs, C Corps, and the variety. So we definitely will cover that. So just to get started, there are different corporate entity types. So the ones that don't require filing are going to be your sole proprietor, your general partnership, and your limited partnership. But this means that you have very little you don't have liability or asset protection, and if you do, you have very little. But the state, federal filing required types are going to be your C corporation, limited liability company or an LLC, professional corporation, nonprofit corporations, or GP and LPs. So why do people incorporate? People incorporate for the protection on that liability. They're also going to save money on taxes, which I'll go into in a little bit. You can raise your capital and issue stock, which is great. And you can also make it easy to transfer your business if that's something you're looking into for the future. And it also makes you look more professional and legitimate to the outside world. So basically, when you think about a sole proprietorship, you're thinking it's a single owner. There isn't it's not a shared ownership. So it's just one owner. And the business name is the same as the owner's name. So my business would be Kayla Friedman Barb. That would be my business. And then you can make easy cash withdrawals, which is great. And then, you do need a license or a permit in certain states, but not all. Partnership is similar. So it's two or more owners, the same easy cash withdrawals. You're registered with the state. You want to add something to general partnership, like a perk?
You know what? Typically, we do see a lot of people doing more of the corporations and LLCs. Mm-hmm. So, it depends on what they're looking for. If you're really looking to have that protection and all that protection, you want to incorporate. I don't know necessarily that the partnership is going to be your best option.
Exactly.
But, yeah,
that's exactly what I was thinking.
I was going to say we do get calls for those, and we do it, but not as often as a corporation or an S corp. And LLC, it's something of that nature is more what we see.
Yeah, we want to make sure that you understand that as a sole proprietor or a partnership, you're going to have a lot less liability protection than you will if you incorporate. As with a limited partnership, it limits the owner's liability, but there are a lot more rules to it, and it is a little bit more difficult. That's my understanding. So an S corporation is a type of business that allows income to flow through the corporation without being taxed until it's claimed as income. So what that means is that if you are an S corp, the owner can take a portion of their income as like a fair and reasonable salary, which I always recommend doing this with your CPA because they're going to know what that's going to be. So that's normally based on your profession and what state you're located in and what the average salary is for someone in that type of job. And then that income is going to be subject to all payroll taxes. But the rest of the income can be classified as a distribution, which is only subject to personal income taxes. So one of the biggest things is that with an S corporation or with a sole proprietor, you're doing it on your own tax return. So everything that you're making is being taxed completely. Whereas if you're as an S corporation, you're only getting taxed on a certain percentage. And we'll do the numbers in a second, and you'll see what a difference it can really make. So the IRS is always watching S corps, so I always recommend to my clients, no legal advice, but I recommend to my clients, to be on payroll at that point, because the IRS likes to see that you're doing continuous payrolls, that you're paying yourself continuously, you're filing your quarterlies, your year-to-dates, and then you wouldn't want the IRS to target you and then wonder why, your business is making $200,000, reasonable is $40,000 a year. So you want to just make sure that you're on the up and up, and using a service can help you stay out of the eyesight of the IRS. So example. So this is one of the examples that I thought was really powerful. So tax as self-employed. So this is a sole proprietor, not an S corp. So if you make $100,000, your earnings are subject to all taxes. So let's say it's going to be 40%, which includes your Social Security, Medicare, federal, and state taxes. So your net pay is going to be $60,000. If your tax is an S corp, $100,000 is your income, and you take $30,000 as your salary. Your partial net pay is going to be $20,700 after you do the employee tax and the employer tax. And then the $70,000, which is classified as your distribution, it's taxed only on your federal and state, so it's 15%. So your partial net pay with that is going to be $59,500. So your total net pay is going to be $80,200. So as you can see here, with that scenario, the approximate tax savings can be around $20,000, which is not a small amount of change. So as you can see, because it says S corp net pay is $80,000, self-employed net pay is $60,000. So you can kind of see, how that happens. There is an incentive to set up S corps because you will be saving money, or your clients or people that will be saving money on their taxes. But they just, I really recommend talking to your CPA before you choose that reasonable salary number, because you don't want to be flagged for it being too low. So definitely talk to your CPA before making that decision. So just to show you a little chart, this is what's going to get paid on your salary, which is going to be Social Security and Medicare, federal, state, and unemployment. But in the distribution, you won't be paying your Social Security or Medicare taxes. So here are just some of the top industries that can benefit. So if you are working with clients who are attorneys, doctors, dentists, real estate agents are huge. Real estate agents, I think a lot of our clients at Paychex are real estate agents who choose to become an S corporation. Salespeople that receive a 1099, so if they're just subcontractor salesperson, this would be a really good opportunity for them to save some money in taxes. And home-based husband-wife businesses. We get a lot of, what are they called? Mompreneurs, mom pops. Poppreneurs. Great. Do you want to?
I think the important thing to highlight, and as you go further with your PowerPoint here, you can be an LLC with an S corp. You could be a S corp, and have shares and all that good stuff. So it is more than just, I want to be an S corp. You could still pick an entity, because you can't file the S corp at the state level. So you will first have to choose if you want to be a corporation or an LLC, and then you would move forward with the S corp filing.
I think the big thing to point out is, I know in the first slide it was like sole proprietorship, and it kind of showed like what it is. And I think the thing to point out with that is you have no protection on your assets. So if something happens and you're sued or anything, your house, your spouse's, and everything is up for grabs. But at least with a corp and an LLC with an S corp, you're protected. They can only go with the business, not for any of your personal assets. So that's definitely something to point out.
Yeah, higher level of protection for sure. A C corporation. Do you want to speak more about a C corporation?
Yeah, so if your client does want to file a corporation at the state level, it is filed as a C corp. If they want to become an S corp, they would file the S corp election form with the IRS, which is the 2553 form. Typically, when we have clients come through and we are going to place a S Corp order, we'll get their C Corporation filed with the state, and then when we ship them their file package with all of their file documents, in there they'll find the S Corp election. And I don't know if you guys are familiar with deadlines and things like that, but once you incorporate and you're filed and approved by the state, you have 75 days to make that decision if you want to elect for an S Corp. After that 75 days, you will have to wait until the following calendar year. And if, maybe you've been operating for the last 20 years as an LLC and you decide you want to be an S Corp. If you're in the middle of a year, you're going to have to wait it out, but the cutoff date for that next year will be March 15th. So, there is a little deadline. Yeah. Mm-hmm. So to be aware of those things. So we do have clients right now that are calling and they want to change their existing business to an S Corp. So, we're still more them and get that paper, get it into the IRS, but it won't get into.
So maybe instead of just doing the next two, I think are C Corporation and LLC, maybe you could just, or you can just walk them through the differences of those two.
Oh, sorry.
That's a big question that I get a lot. So
between Corps and LLC.
Mm-hmm.
Yeah, I think the main difference is how they're set up. A corporation, there's a lot more to maintain it. I mean, you have to do minutes, bylaws, corporate meetings, everything like that. Then LLC, it's a little easier. I think you have a lot more details on that, but
yeah. So corporations, they have a lot of maintenance to go through. Mm-hmm. Typically, the formality structures of the two are very different, and it really, if your client's not sure what entity type to select, it's best that they do go to the accountant, because based on their income and how many people are going to be inside of the business, all of that goes into a decision on which entity they want to pick. So when we have clients come through and they're not sure, they just want to start a business, we always refer them back to their accountant or CPA. And then once you've decided what you want, we can move you forward. Mm-hmm. As far as the LLCs go, I got to say, for people who come through the door and they just want to incorporate, those are easy for them to understand. There's no big upkeeps. Mm-hmm. The members are the owners. So as far as, them reading through all of their paperwork and documents, it's fairly easy for them to understand.
Great. Yeah. Any particular questions at this point about either a C Corp or an LLC? Yeah.
On an LLC, I know there's a managing member and then there's the members, depending on the percentages that they apply.
So for LLCs, you can either be member managed or manager managed. That would be for the owners to decide which way they want to go. And they are, basically what they put in is going to be their percentage of ownership. And the state, as far as the state side goes, some states don't care who the members are, some do, but all of those fine details would get noted inside of their operating agreement, which is their internal documents on how they run their company and who takes care of which proportions.
Okay, because not too long ago I had an incident where the managing member did not want her name on the account that we were opening. But I don't know, based on the law, per se, banking law, she has to be there because it states she's the managing member. Then she, out of the blue, said, well, I have a friend that is going to be, taking care of it, like an authorized signer. I said, well, I'm sorry, but on an LLC, he has to be part of the, I can't just have him, out of a hat, come sign documents. So, you do have to file and update the LLCs based on, make amendments, so forth and so on.
They do. Like for instance, California, we're very lucky. They list all that information on their articles, and you can usually pull it from the state site to see the company's statement of information to see who owns the company. As far as updating it, for states who don't require that information, you do it inside of your operating agreement. It's best to have that notarized so that it does uphold in court or at banks or wherever it is. But we can, for clients like that who, I don't want to be on it, let's change the managing member. We can assist with that. File an amendment. We can help them file their report to change it.
Documents.
Okay.
Yes, we can help with all that.
And so this is just a little chart on the legal liability for the different types of entities. So for a sole proprietor, there's unlimited personal liability, like Alicia, Alicia said. They can go after your house, they can go after your car, your children's college fund or whatever, what have you. As a partnership, you're fully liable as well. and limited partners are responsible to the extent of their investment. So whatever they've put in, that's what they can be liable for. But for a corporation, CNS, it's just to the extent of the investment. There is a lot more liability protection with a corporation, and then for an LLC, members are not liable for debts and liabilities, and management will incur those liabilities and some personal liability. So here are some pros and cons. I'm not going to read through it because that's so annoying when people do presentations and they just read their slides. But basically, we kind of went over the pros and cons of a few of them. I think that the cons to being a sole proprietor and possibly a partnership are going to be those liabilities. You're gonna have that. But as far as like an S corp, C corp, and limited liability, you're definitely more protected. And that is kind of the extent of this presentation. But we're happy to answer any questions that you have and maybe open it up into more of a roundtable discussion. So does anyone have any questions or thoughts? Yes, Yuri.
Is there a difference in setting up an S versus a C as far as how much fees they pay?
So, like I said, at the state level, they're always going to have to file that C Corp if they want to be the S Corp. It is filing that tax form with the IRS. Free of charge. If your client wants to go straight to the IRS's site, download the form and fill it out and fax it in, they can. If they are coming through us, we charge a small service fee of $39. So if they're already in existence and they want to be an S Corp, it's just $39 fee. We'll prepare the form. We'll sign and date it and fax it in.
And I feel like most clients are happy to pay it. It's such a small fee to make sure it gets done correctly, and the IRS, rather than them doing it, and it was never done completely.
Yeah. Isn't there also an annual fee that corporations have to file? Their statement of
there is. It's a small fee. I think right now in California for a corporation, if you want to get a copy back, you're looking at $31 for that statement of information.
So for someone like myself, I don't have any employees, so the only way I can go is S corporation?
No, so if you don't have employees, there's plenty of people that open up businesses and don't have employees. It's just them. There are so many businesses like that. And for businesses that are like that where they don't have employees, they will do an LLC with an S Corp election, call Kayla, put themselves on payroll so that they do see that S Corp savings.
So LLC with the S?
Yeah, that's typically what we see. Those are single members that just want to put themselves on payroll for the tax benefits.
Right.
So you can't really set up your own salary like you said, it has to be like research and...
Has to be reasonable. Yeah, like...
Well, it's reasonable to me.
Exactly.
Right.
It always depends, yeah.
Expander here.
Yeah.
Expander here.
Can someone maybe generally explain the difference in the double taxation for a C corporation versus an S Corp so that people sort of understand that issue?
Yes. So our office, we don't specialize in taxes. We're just a straight document filing service. I can tell you though, for corporations, they do get taxed on the shares, and then as the corporation as a whole. The S Corp will eliminate that double tax. As far as to the extent and all the fine details, that would be for your tax accountant to advise you on.
I agree, but I will say that you're right. There is a double taxation that occurs with an LLC based on the shares that you take.
Corporation.
I'm based on a corporation. Excuse me. Based on that part of it, but that doesn't occur with an S corporation. But that's definitely something you should talk to your CPA. In no way am I telling you, that you need to be doing this, because you might not need to do this. It's totally up to you, and it's up to the person. I'm just trying to give you some of the facts that I found useful when doing presentations with some of my accountants as well. If you need an accountant to talk to, I know a couple, so let me know. But yeah, that was a really good point. I think that was in here somewhere. I might have glazed over it. Oops. But that's a really good point, because then you end up paying double taxes, which is not fun. Any other questions? Yeah.
So the liability that everybody's in fear of, it feels like, is what primarily?
So, let's say you have a client not happy, goes after you. The corporation and LLC protect you, so they will not go after anything other than the business. So I think that's what everyone is fearful of,
especially
when they can not only go after your car, your house, but even your spouse's, income and things like that, that's when it's very fearful. So at least this protects it and separates it from you.
So an unhappy customer tries to sue you for everything you own.
Yeah.
Because they win in court.
Yeah.
But I mean, most of us here, like, yeah, we have errors and omission. We have to have it. I'm sure you have to have it too.
A what?
But I don't know what you guys call it.
insurance.
Insurance. Yeah.
Malpractice insurance,
yes.
for example.
Yeah.
Yeah.
So
But it's
like
limited.
that.
That's the problem.
Yeah.
Well, yeah.
Right.
It's
there.
limited. Some of the insurance are limited, and these people are out to get blood.
Everything, yeah.
Yeah.
The other thing people have to keep in mind with corporations, because I defend people who get sued personally because they own a corporation, is that you have to not only form the corporation, but you have to maintain your corporate formalities or you lose all of that protection. And that's really important. A lot of people think, I filed the papers, now I'm done, and I'm safe. And it's just not true. You need to have minute books, you need to have corporate resolutions, you need to get your statements of information filed, you need to pay your fees.
Separate bank account?
Separate bank accounts, not intermingling money. There's a whole bunch of different factors to get involved there.
Yeah, and maybe just to expand on what you said, if you guys do have clients that are in those situations where they're not in compliance with the state, we can also help with that. If they need to make any changes to their company, we can help with that. When they're ready to expand and do foreign qualifications, we can help with that. And if it does get to a point where they do want to close the business down and dissolve it, we do offer that service as well. So we can.
We're always fighting with people with corporations because they want to walk in and say, I want to take so much money out. And we're like, do you have a check?
Yeah.
What do you mean? It's my account. No, it's a corporation's account.
Yeah.
You're a signer.
Yeah.
And so, well, I need the money. I said, well, we're going to have to give you a counter check or something because didn't your accountant tell you can't be writing check, just withdrawing? How are you going to check with the IRS if you get out of it? And then their eyes open. It's like,
Light bulb.
light bulb goes on. But yeah.
I need money for my massage.
Yeah.
No, I have an appointment at 1 o'clock. I need the cash now.
Come by the airport, okay? They're on their way somewhere.
I think that happens a lot is people will incorporate thinking it's all entitled to themselves and that there's no upkeep. They could just walk into the bank and take all the money out that they've earned.
Exactly.
And I think that's probably where you come into play. Hey, get yourself on payroll so that you are getting a check, whether it's monthly, bi-weekly.
Right.
And then, you'll be able to get everything in line so that you don't get audited.
Definitely. And I have a client right now, he's making like $300,000 a year, but he's paying himself $60,000. And so 240 of that isn't getting taxed. And so it does take a little upkeep, and I get that, but, he's saving a lot of money by doing it. It isn't for everyone, but it is for some people. So now you have some facts. You can get more facts over there with John. Very helpful. I wrote it down, took some notes myself. I'm always learning. Any other questions?
Salespeople that get the 1099, what are some things that they're saying or talking about that are like some indicators that they're looking for this?
Yeah, I was actually just talking to someone from Aflac. And I think they're all 1099s, or some of them are 1099s.
Yeah.
And not the guy I was talking to, but this other guy, I guess, who works there makes like, a few of them make over 100,000, but this one guy makes like 1.5 million a year or something. I don't know, a lot of money. And I was like, oh, is he an S corporation, or is he a corporation at all? And they were saying no. And I was like, well, this guy's paying like so many taxes. In my mind, I'm sure he has an accountant, but people I think that are making a lot of money and haven't thought about it, haven't considered it, that would be a good person to just mention it to and just say, hey, have you considered this? You might want to talk to your accountant about it. You might want to talk to Kayla about it. Usually I just bounce them back to their accountant, or I try to work with their accountant to see what's the best fit for them. And then I bring in my partners, of course. But yeah, I think for me, whenever I hear that someone's a 1099, I usually ask them, and especially like real estate brokers or anyone in real estate is usually a red flag for me to at least ask them that question and see what they're doing.
Okay.
I know you touched upon this earlier, but maybe it'd be good to go through some of the payroll ramifications of being a corporation versus a partnership, in terms of what Paychex does and the payroll aspects.
Ooh, I don't even know.
Like
What do you mean versus a partnership?
Because there's no withholding on the
There's
partnership,
no
right?
withholding on a partnership, right? A partnership, you take a distribution from the partnership, but if you're a corporation and you're paying employees, you're gonna have to do withholding. You're gonna have to do payroll taxes and other kinds of payments. But if you're a partnership, you're gonna get the money paid directly to you, the full amount, without anything being withheld, but then later on, you're gonna have to pay your self-employment taxes. So it's a different payroll structure.
Right. Oh,
I'm sorry. What if you're a partnership and you have employees? Then you would need payroll, right?
For the
They'd
employees.
be helpful.
For
Yeah.
the employees,
Yeah.
it'd be helpful with the employees.
Right.
And
You
all of
can
the
pay yourself a
compliance.
salary too.
Right.
Yeah. Right.
But if your partnership may have no employees, then you
What, no
take
one
their-
wants to work with you?
Well, let's say you're a consultant, right? Let's say you have a partnership consultant or you're an attorney for that matter, and it's like, okay, well, is it better for me to put ourselves on payroll or take distributions quarterly or monthly? Does that play a role in anything beyond that? How you go about paying yourself?
That's really a tax question, which I don't think we'd be qualified to answer. You'd want to talk to an accountant in your own circumstance of how much you make and what tax brackets you're going to fall in and what kind of deductions you would have to figure that out.
Okay. Thanks, man.
Sorry. That's a long way of saying I don't
Guess
know.
who's presenting
This whole
next?
meeting is a tax accountant in here.
I tried, you guys. I tried to get an accountant. I tried to get an accountant in here, but they're too busy this time of year. So
Bad time.
after the 15th, we'll reconvene. Bring Richard Moon or whoever's in the chamber.
It does bring up a good
Miss
point.
Miss Sarlo.
You need an attorney, you need a payroll person, you need a CPA, you need a banker.
You
You know,
do need a
anytime.
team.
Yeah, you need a team of people when you go into business for yourself to answer these kind of questions.
Yeah.
So,
Yeah.
that's a good point.
We definitely, I've been working with a few people who are a corporation and they're like one owner only and they're doing their payroll through the CPA. And the only thing I would say to that is that, you know, first of all, CPAs don't like doing payroll because it doesn't really bring them any income.
Yeah.
And, you know, they're not always as, like, as far as liability goes, you know, they don't take any liability with your taxes. So, like, if they're going to be doing your employment taxes or your state and federal taxes, if they don't turn it in on time, you're going to get fined. They're not. So I always tell a lot of the S-Corps that I meet, like, you know, you might want to consider using a service because it is going to be a lot better for you. It's going to be on time. That's the only thing that we do, so we're really good at it. And it keeps the IRS off your back, for sure.
And you guys are much more up in the wage and hour rules than CPAs are.
Yeah.
On the what rules?
The wage and hour rules and all the payroll rules.
They're up to date.
Yeah. I mean, CPAs, that's just not their main thing.
Right.
Yeah.
Some software that they bought 8 years ago for a client and they're still using it.
Right.
And I mean,
Yeah.
no disrespect, but that's...
Yeah. A huge part of my job is educating CPAs on payroll because they have so much going on. You know, they have things to keep up with all the time. You know, I often drop off, you know, things for them, or we host, you know, CPA credits that they're responsible for, you know, getting anyway. We offer them for free. If you know any accountants who like free stuff, you know, send them my way too. But
Every accountant who likes something for free?
I know. I mean, they need these classes.
They'll make the time. They'll make the time for that.
Maybe, yeah. I should have offered Richard. Hey, Richard, I'll give you a free CPE credit if you come to my lunch and learn. So if you guys know Richard Moon, you let him know I want to talk to him. Hey, Richard. What's up, man? I forgot this thing was on.
I know, it was on too.
Cut the last half off, please.
Edit.
All right. Any other questions?
The video did amazing. By the way, I'm watching.
Oh, thank you. I'm glad. If you guys have any questions at all, seriously, please email me. You know, I answer questions for free. As someone said that earlier, I thought it was nice. Just kidding, I'll do it. Anyway, but if you have any questions or you need any resources, like we have a ton of resources available to us. We're more than happy to answer any questions that you have. Personally, I would prefer if you went through me to go to them, but this is their information if you want to write it down as well. But yeah, thank you so much for coming.
Thank you.
Yeah.
Thank you.
All right, let's give flyers if you guys want to take flyers.
Everybody do a quick wave to the camera. Say hello, hello. Hello. Thank you everybody for joining us.
Bye.